The money multiplier in an economy increases with which one of the following? This question was asked in UPSC 2020 prelims question and lot of students got confused while attempting this question. So through this question today in this video we are going to do a very simple and brief and easy concept which is money multiplier. And let's get started. So let's define money multiplier. According to standard definition, money multiplier is related to the banking. How much money a bank can create from its deposits and reserves, it is called money multiplier. So when we read this statement, it seems very simple, but no, this is little bit complicated. So now let's dive into the detailed part of it. So let me give an example here so that this concept becomes little bit easier for you. Suppose you have just graduated from your college and your grandma is very happy and she is proud of you. She has saved 1,000 rupees with her, so she gifts you 1,000 rupees as a gift. What you are going to do with that 1,000 rupees? Definitely you will go to your bank and you will deposit that 1,000 rupees with your bank. Now that money is with your bank. What your bank is going to do with that 1,000 rupees that you have just deposited in your saving account? So bank has many options. First option is that bank is going to keep that money in the locker. But no, that is not a viable option and that is not the functioning of the bank. So the second and the best option your bank has to give that money to somebody else as a loan. But bank is never going to lend 1,000 rupees in full. Now suppose there is a person whose name is Ram and he needs some money. So he will go to the bank and ask for the loan. Now what bank will do? Bank has now 1,000 rupees that you deposited. Do you think that bank will lend this whole 1,000 rupees to the Ram? No, it never happens. Bank is going to lend only 900 rupees to the Ram and keep 100 rupees as a reserve. With this 900 rupees, what Ram will do? Definitely, Ram is also going to save that money with his own bank, which is PNB in that case. Now, who is going to decide that how much money this bank is going to keep as a reserve? This is decided by the RBI, which is also called the reserve ratio. Why this reserve ratio is used by the RBI? This is used for the money supply. If reserve ratio is very high, it means bank needs to keep more money as a reserve and bank has less money to lend to the people. It will decrease the overall money supply in the market. But if cash reserve ratio or overall reserve ratio is very less, it means bank has more money to lend and it will increase the money supply in the market. So this cash reserve ratio or statutory liquid ratio is used by the RBI to increase or decrease the money supply in the market. How much total money now bank has? You had 1,000 rupees and you deposited that 1,000 rupees in the bank. Now Ram also has deposited 900 rupees with the bank. Now there are total 1,900 rupees in the banking system now. This process is not going to stop there. This process will continue further. So if I make a table and try to understand this, that how far this process is going to be. You deposited 1,000 rupees, bank kept 100 rupees with itself. Why? Because reserve ratio is 10% in that case. Let's take an example. And 900 rupees is going to be with the Ram. Now Ram has 900 rupees. Bank is going to give 810 rupees further as a loan and keep 10%, which is 90 rupees as a reserve. Now bank is going to give this 810 rupees as a loan to Sham or somebody else and keep 81 rupees as a reserve. Now this process will continue till the time total reserve money with the bank is 1,000 rupees, which was the initial money that you had. How much money bank lent out of that 1,000 rupees? So this is the total money, 9,000 rupees that your bank lent to different people. And how much money is deposited with the bank, which is 10,000 rupees. Now imagine this interesting scenario. Initially you had only 1,000 rupees. Out of that 1,000 rupees, bank lent that money to different people and created new money, new deposit and new reserve. This is called money multiplier, and this is how your banks create money. This is called money multiplier. In India, this is around 5 times or 6 times, means money multiplier is on an average is 5 or 6. So if you have 1 rupee And if you deposit 1 rupee in the bank can generate 5 rupees or 6 rupees as a money multiplier. If money multiplier is very high, it is 7, 8 or 10, it means more money is generated. If money multiplier is less, it means less money is generated. Now, let's move to the conclusion. What are the outputs that we have taken from this discussion? More cash people or bank hold, less is the money multiplier. Because money multiplier starts only when people go to bank and deposit their money. More money you save with your bank, more is the money multiplier. More money people save in the account, more money is created. Now let's focus on the question which was asked in UPSC in 2020. Question says the money multiplier in an economy increases with which one of the following? Now take this into account. It only asks for the increase and not the decrease. The first statement is increase in the cash reserve ratio in the bank. When cash reserve ratio is increased, it means money multiplier is decreased. But this question is asking about the increase in the money multiplier. So this statement is absolutely incorrect. If there would be decrease here, then this statement would be definitely correct. Next says increase in the statutory liquid ratio in the bank. Again, this statement is incorrect because when statutory liquid ratio increases, money multiplier decreases. Because in that case, banks have less money to lend. Third statement says increase in the banking habit of the people. Definitely this is the true statement because when banking habit of the people increases, more and more people go to the bank, they save their money, banks have more money, and that is how banks can create more money. Increase in the population of the country, this statement is absolutely weird because increase in the population doesn't mean that people are going to do more banking activity. Even if there is a less population, more people can go to bank, and if there is a huge population, less and less people can go to the bank. It all depends upon the income of the people. The infrastructure is also there, awareness and other factors also. So from this whole discussion, now we know the answer is C. This money multiplier topic is very new, and I hope you have understood this topic from this small discussion. And if you want more videos like this, more discussions like this, please subscribe to our channel, like this video and share with your friends. Thank you very much. All the best and Jai Hind.